a little hint on refinancing now. I know it's the big thing, and you really should kind of get on the bandwagon now because rates have flattened out. But the idea is to refinance with a zero cost mortgage. Let me explain what that is. Let's get started on We Fixed Real Estate.
I am Drew Hendricks, and we've got Jen May here.
Hello.
And we're here to discuss the intricacies of We Fixed Real Estate.
Yes, we did. We hope we did.
Biggest news. Let's just jump into it. Compass is
yes. So we all know now what the Compass management was doing over the weekend. They were negotiating a deal to try and buy the entire business of Anywhere, which is one of their competition. And basically that's Sotheby's, Corcoran, ERA, Century 21. I don't remember. This is a whole bunch of them. So what Compass is trying to do, and they haven't announced this, but this makes sense. A, tell everybody they don't have to be NAR members anymore because they're going to be big enough to be their own trade organization and lobby Congress and all that kind of stuff. Number one. Number two, and this is terrible for consumers. And by the way, any class action suit attorneys, listen up, because have we got a bunch of business for you? Dual agency is going to be psychotic. They're going to form their own MLS, and I'm sure they already have it built because they have their own inside listings. You're not going to be able to see any listings that they have. They're not going to send them to Zillow. They're not sending them anywhere. They're going to do it themselves. And in order for you to see it, you have to become their customer. And you have to, just like Redfin does, you click on a little button, I accept that I will pay 2.5%. Consumers, I mean, if this was a different administration, this would never even be thought of because it would never be approved. But I am sure there's going to be a way for this merger to go through with the Justice Department approving it, or the Justice Department not saying anything, not commenting, and not caring. Mm-hmm. So the stock dropped precipitously today that I saw. And when it opened, originally, it's dropped significantly from when it first, was issued. So this is another thing. It's going to be David versus Goliath if this thing goes through. But I think I know how we're going to survive at doing fixed fees and helping consumers. I don't think it's going to be a problem. Because what's going to happen is you're going to get fake buyers coming in, clicking the buttons, and it's going to be real estate agents who aren't in this scope. So there's kind of no way for them to forget it. And it's like, they're not going to not have open houses, so they're going to try this. But in the end, I don't think it's going to work. It's just going to be a house of cards. Mm-hmm. So we shall see, kiddies. I'm sure they're now going to buy a mortgage company. They're now going to buy National Escrow Company. They're going to try to put it all in one big place, one big pot.
Yeah, makes you wonder if too big is too big. So it looks like from what I'm reading here as you're talking, it's going to bring together 340,000 real estate professionals. I mean, who's going to be the
340,000 people with a license, of which, 20% tops are really doing something. But still, that's a nice big number.
So who are the competitors going to be? I mean, obviously, Arrivva with the flat fee is offering a completely different value proposition, and it's going to be competitive in that respect. But on the run-of-the-mill real estate agents like Compass, are you bumping up against Redfin, Zillow? Who's the one person?
Oh, Redfin. It's Redfin versus Compass now, basically, because they're the two biggies. I mean, Rocket bought Redfin, so that Compass is going to do something on the mortgage side to try to keep the income coming in. But it'll be a different world. We're looking into creating a IDX from the MLS with some significant improvements to it that will make you want to come to us to look for property as opposed to Redfin or Compass. So details to follow when Drew gets busy enough. We get into it. It's big and it's difficult. So We got some other things up our sleeve we're working on. Um, just, I forgot to even tell you this. Just to tease this a little, next week or the week after, we're going to change this subject a little. We're going to get this insurance broker on podcast,
All
talk
right.
about, yeah, especially difficult properties in California. They have another way besides Fair Plan to actually get people coverage and get it cheaper than Fair Plan. So I want to tease that. So these are the kind of things we look at our consumers, and the only thing we care about is helping them, finding, the best thing for them and making it easy. Like, we get the fully underwritten pre-approvals in 2 days. We now are doing jumbo fully underwritten approvals. Yay. That's back. So we can do everything. And, obviously you want to get out and, a little hint on refinancing now. I know it's the big thing, and you really should kind of get on the bandwagon now because rates have flattened out. And when that happens, it kind of stays there until some significant event happens to go up or down. It's going to keep eventually going down, but it doesn't go down like every month. Like the Fed doesn't meet and say, "Oh, let's lower mortgage rates by another quarter." And we've been over that 100 times. But the idea is to refinance with a zero cost mortgage. Let me explain what that is. So we put in your scenario, 30-year fixed, value of $1 million, loan amount of 500,000, whatever it is, your credit score, your zip code, owner occupant, blah, 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 50 things. And you can go to arrivva.com/rates and put this in yourself. And then you get the rates. And the rates, it's like a seesaw. So let's say it starts at 6%, but the lender gives out $10,000 at 6% back to you towards closing costs. Well, you don't need that. So let's say you go to 5.75% and they give out 4,000. And at that 4,000, we've added up what the actual costs are, and we know that 4,000 can cover it. Even if it's a little less and there's extra rebate left over, that applies to your principal balance. So that's the way that they do it. So every rate has a different price to it. So you can go and get the lower rate, but you're going to either get less rebate or actually pay fees to be able to get it. But it doesn't pay to pay the fees now. Just, get yourself down from, 6.5 to 5.75. I'm just making up numbers here, with no cost. And then at least 6 months later, if it goes down again, which it will, you take it down. Also, take a look at some other little things to help you. Realize this, the 25 and the 30-year fixed are exactly the same rates. Exactly. That 25 is just forcing you to pay it down quicker. Because let's say if you're in the house 5 years already and you have a 30-year mortgage, why would you restart the 30-year? Yeah, if you want the lowest payment and you need that, great. But at 25, you may still get a lower payment and stay on that same amortization course. So it's not just rate, it's term. Be careful of the term, because eventually the rates get low enough, then you start changing. You can do a 20-year, maybe a 15. We're actually doing a 10-year that we locked in at 4 7/8 with no cost. So yeah, but a 10-year amortization, that's a big number.
That's aggressive.
Yeah, that's a bit aggressive. It's not for everybody, obviously. But remember, the 25 is the same as the 30, but it forces you to make that extra payment, and you reduce the amount of interest you pay over the life of the loan. Because you're always paying interest on the outstanding principal balance in the next month. So the way that works.
I want to hear a refresher, because you did throw out a term. If someone's new to this show and they haven't heard the mantra fully underwritten pre-approval, give us one more, why it's so vital.
Let's say you're going to go buy a house. You buy the house and you put in a contingency for your mortgage approval. You love this house. You're going to go get this house, and then you submit all your documents after you're under contract to the lender, who sends it to the underwriter, who's the only person that can make a decision on a loan, not a loan officer. Do not listen to a loan officer when you say everything's fine, because they're not the ones who can make the final judgment of that, especially if it's not vanilla. So here's a good one. You have been getting RSUs, restricted stock units, most of you in California in big corporations get those in tech world. But there's a guideline that says you have to have it for at least, is it 2 years or 3 years, Jen, for Fannie? Keep forgetting.
It's 2 years, but some lenders will make an exception. It just depends. It's
Yeah,
the
but
scenario.
it's the Fannie Mae guideline is 2 years. Yeah, the lenders who make the exceptions are going to be the higher rate lenders. So you have it for 1 3/4 years. It goes to the underwriter. They can't use your income. You can't get the house. I'm using this as just one example. Or you have a deposit of $50,000 into your account within the last 2 months. And that money came from your uncle's just gave you cash and you just put it in your bank account. Thank you, uncle. You thought it was a nice gift. You can use it. No, they won't count that 50,000 because we can't figure out where it came from. They do an audit of your bank statements for 2 months that say, where did all the money come from? So you have to document it. And if it's a source that's not accepted, they can't use it. So if you had gotten a fully underwritten mortgage pre-approval, which means getting it fully underwritten like you were under contract before you even start looking for a house, then you'll know exactly how much your maximum is. You'll know precisely what it is because now you're approved for your mortgage. And if you're in a competitive bid situation, especially in Northern California, everybody else is fully underwritten pre-approved. So you have to at least match them and waive the mortgage contingency. So we're not telling you to waive the mortgage contingency without the approval. Just get the approval first. That's all it is. Get it over with.
And understand that you've got to submit your finances, and this is the equivalent of almost getting a loan. It's not like this sheet of paper here that says I'm pre-approved for a loan of $750,000. That's not underwritten by anything.
It's worse than toilet paper.
It's definitely rougher.
Getting it done, then hey, you're in the clear. One less thing to worry about.
Okay.
So you know it can be done. I mean, there's nuances about mortgage brokerage, mortgage banking that you don't have a clue about.
In the scope of all the clients and all of your history, how many people try to go to market and compete not being fully underwritten, pre-approved?
Jen?
We don't usually let them.
Exactly.
But there are clients.
Now, say you have a seller, they're selling a home and you got 10 offers. Of those 10 offers, are all 10 of them fully written?
They should be. Yeah. Because I tell people, hey, if you're not fully underwritten, your offer goes to the bottom of the pile. Because the other game, even if you're the highest price, the reason is the seller thinks, well, they have a mortgage contingency. So they'll try in some way if the appraisal comes in lower, and we're not even talking about an appraisal contingency, but technically you'll get rejected for the mortgage because of an inadequate collateral are the words, inadequate collateral. And so you tell the seller, hey, I got rejected from my mortgage. I want my money back. And they'll give it to you. So they don't want that to happen, especially in a multiple bid situation. They want cash buyers. And that's why we have our cash buyer program that closes in 10 days that we broker. And the lender guarantees to the seller that they will close in their name if the buyers don't close. It is gold. It is more than gold. And it beats out cash offers. Every time we've used these, knock on wood, we've gotten under contract. Now, obviously, you got to beat the right price, but it's a spectacular way to outdo everybody on a competitive bid. And San Francisco, cuckoo for Cocoa Puffs. You're thinking about a single. For most of them, you're going to be in competitive bid situations. So just be prepared. You have to do it anyway. And I tell people, you have to do it anyway.
Oh, yeah. And that 10-day close, that 10-day cash close program, that's not a swing loan. How does this work?
You can call it whatever you want. We call it interim financing, meaning all you're doing is using their loan just to get through closing. Immediately when you close escrow, you go off and you refinance to your quote unquote permanent mortgage. Those of you worrying what it costs, it's not as bad as you think. The total charges are 1% of the loan amount plus $5,750. So that's the total It's not like they're charging you 10 points. We have another lender that sort of does these swing loan, but they're 3 points. I mean, they're insane. So this is a really good program. The points that I mentioned, all the costs are tax deductible because it's for the purchase of a primary residence and all the points are deductible. So that's the good news. So it doesn't hurt as bad.
Well, yeah, that's interesting. Shifting the topic, there's been a few new announcements out there, especially that's rippling through the Bay Area and the whole tech sector with the H-1B visas.
If you haven't heard about this,
I watched the TV where people had boarded the flight and the announcement came off and everybody got off the flight.
it got off a plane. Yeah. All of a sudden, out of nowhere, hey, anyone with an H-1B, you pay $100,000. I don't even know what it, it didn't make any sense. It had no details, but it was like, F you to all you people from India who are here in California buying property and making big bucks and working for Meta or Google. And it's like, but here's the thing. David Sachs is the guru of, I don't know what his exact title is, but he's the guru of the internet and tech and all that, who works right for Trump. And he raised a hell of a lot of money for Trump. And so David's not going to let this happen.
Mm-hmm.
So there's going to be some kind of a nuance to this, and it's going to be in a little more detail. I don't know. They said, if you have it now, you're okay. But if you want to get it,
the
bottom line is
charged to a one-time charge to now just new people.
Who knows? But here's the bottom line. I read this or I heard this, and I'm like, oh man, that's crazy. What are they going to do? The next thing I see the next morning in a $4 million listing, which didn't even look like a $4 million listing, wasn't that great a house, in Los Altos, which is in the heart of the Silicon Valley. My clients wanted to go see it. They drove up. They took a picture. They said there's 30 people here at the opening of an open house.
Oh, wow.
And this is the day after the H-1 visa crap was announced. So it's like, no here. So, I've had none of my Southeast Asian clients call me and say, hey, list my property. Or South Asian clients say, list my property. So, nobody knows what's going on, but just we'll keep an eye on it. You keep an eye on it. I'm sure the companies, the HR person at each of the big companies went,
Things like a headhunting fee. Like if you're going out and you hire a headhunter to get you an employee, you're going to have to pay a certain percent of their salary. Well, if you're a large company and you're hiring overseas, that's like the entrance fee now.
Yeah. Or we could see something that, hey, they can hire some really smart people in India, but not bring them over and have them work remote, which hurts our economy. So it's just, it's not well thought out. Let's put it that way. A lot of these announcements are just announced. There's always a reason for all of this. The problem is none of us are in the room. None of us know the reason. None of us know what the plan is. They don't announce it. The governments just do things. Businesses do things and everybody speculates. Or how about, like I was talking about with football players last week. It's like, we're not in the huddle. So we don't know. We're not in the locker room. So yeah, all of this is speculation at this point. But we're not here to say, breaking news, Compass. Please get rid of the two words breaking news at this point. Because it's all broke. So, so it'll be interesting to keep an eye on that for sure.
Jen, what's the good news on your side? How are mortgages these weeks?
We're pretty busy with refinances. We have 3 refinances we're working on at the moment. We're just getting them all to the next step, getting them locked, and one's about to close tomorrow. So
the one that was about to close, he's been hanging around for, I don't know, 6-8 months. And we finally locked them and closed it in 12 days, I think. And it could have been quicker, except he took his time getting some documents. Yeah. But you're still paying for appraisals, which I bitch about all the time. Why? Especially, that was, I think, like a 55% loan to value. It's like, seriously, what do you need an appraisal for? And That's a whole different discussion.
In this recent batch of refis, what's been the sweet spot for the people that are ideal candidate to refi?
Rate and term, really. It's been both. Obviously, they want to get a lower rate, but they also wanted to drop the term. Now, look, if you're at 6.5 and for some reason you can't refi, but you really want to pay the loan off, just take your original loan amount, term, interest rate, and change the term and see what the new payment would be. And if you make that extra payment, you can reduce it from 30 to 20 years because of the term. You can always pay extra principal because your payment is based on, for a mortgage, it's based on the outstanding principal balance each month. So more will be allocated to principal than interest if you pay down the loan. It's that simple. It's called simple interest.
There are no prepayment penalties. So that could
Good
be
point.
cool.
All owner-occupied property in the United States, there are no prepayment penalties. But of course, you have to wait 6 months to refi, as we discussed in previous episodes. But
You don't have to, but it's good to.
yeah, it's good for the loan officer. Just made the money on your refi. Yeah.
Now, Jen, say you've got this new flux of refis. What's the one piece of advice you can give someone coming to you that's thinking about refining, or a mistake that you see everyone making that's just easy to fix?
If they could consolidate to a limited number of bank accounts, we have one client and he's moving around a lot of money and he's sending screenshots, and the underwriters don't really like screenshots. They like the statement and to see each month how where the money's coming from, what's going on in your account. So it's just, some people have 10 to 12 different accounts.
Here's the thing on a refi. We don't need to verify all the assets like we do on a purchase. Because if you're doing a no-cost refi and you escrow yourself, you don't escrow. So it might cost you, a couple $100 at closing. Really, we only need to verify a couple $100. Everything else doesn't matter. Yes, on jumbos, some of them you need to show 6 to 12 months of mortgage payments as reserves. So find out what the reserves are. And this is just narrow it down to maybe your checking account where you receive your pay stub, something like that. So that's important. You don't need all that kind of assets, and we'll just remove them.
Now, is it
just don't need them.
If you don't need them, but so it's you're going to buy a first mortgage, so there's a little more of a thorough vetting. Is it a mistake? So you have 20 bank accounts, you're like, I'm just going to close them all and go down to 4. Is that a red flag that you just eliminated?
No, but it's a pain in the ass because we have to show all the transfers. So you might as well, and you're going to need to give us 2 months of bank statements and the actual statements. So no screenshots. They just don't take them because, it's your money, but the bank doesn't. So that's important. And sometimes screenshots don't even have your name on them. So it's like, whose account is this? What date is it from? So it doesn't always work. So we need the statements.
Good advice. Anything else, Jen, that you would recommend people do?
I think the main thing is statements, and then
insurance.
Insurance.
Make sure not only you give us your current insurance policy deck page, but give us who your agent is so we can contact them and get it changed over.
Some of them are such a nightmare to contact too. Our refinance that's closing tomorrow, that company, he wasn't showing up in their system. We have to get the mortgagee clause added, and it was just a bunch of back and forth with the insurance. Because I guess AAA doesn't actually own the insurance. They have a subsidy that owns that insurance for them, and it's very confusing.
It can get nuts. It's a good time to look at your insurance policy too. Maybe it's time to get a new one or change over for some reason or another. So the refi time is a good time to look at that because you're looking, probably the first time you look at your policy since you bought the place.
Yeah, I need to look at mine. On the other hand, it hasn't gone up, and I'm worried if I try to adjust it, it's going to be a red flag.
And then State Farm or Allstate don't say a thing.
Yeah, it's USAA, but
gotcha.
No news is good news, but I do need to look at it.
I don't know if they're actually doing new policies in California. I just can't remember if we dealt with any of them.
with USA.
Yeah,
Huh.
not sure.
When I bought my house in February, I had to use Fair Plan.
Really?
Yeah,
And I think it was because of the LA fires.
You were right next to the fires.
I was next to the fires, but not
In the fire.
in the fires. So
right.
I'm not
Close enough.
but close enough.
Could you actually see it from your front yard?
You could see the mountains a little bit, but not like.
Yeah. And she's in the flats in Arcadia.
Yeah.
So, which is the next town over from Altadena, which is the one that burned. So,
Yeah, we had that unusually hot January, and now September has been the coldest I can remember. Rain.
did you get rain? You got rain this week?
It's been raining today. It was raining yesterday.
Really? Good for you. I'm jealous.
But not like that heady tropical rain. It was cooler. It felt like it was like November.
Who knows? But yeah, in LA, we got like, overnight 3 quick little downpours, and that was it. So we could use some more. Be nice. But then they got all the floods. It's crazy floods. There was an earthquake today in Berkeley.
So today, for those people that care, probably don't. Today's my anniversary. I was married on September 22nd.
Happy anniversary. Happy anniversary. Happy anniversary. Happy anniversary. Flintstones. Yes.
Cook steak. But anyway, so today we always remember because we were married outside. The day we were married, it was 104.
Oh my gosh.
And so every anniversary, we kind of remember the day. It has never been 104 at the end of September since we got married. And today I think we have a high of 68.
Wow.
In San Diego County.
Yeah.
Crazy. Welcome to California weather.
Yeah, it's definitely erratic.
Whatever it is.
There's nothing left to do but start singing Dream Weeper.
I'll leave that.
If you know, you know. I don't know.
If you know, you know. Next week, Dreamweaver. That's all I'm going to say.
Well, this has been another episode of We Fix Real Estate. Fred, do you want to sing us out?
God, no.